Good morning, retail traders. Friday was our last trading day of the year. And what a great day it was, for sure. If you weren't in anything, and if you were, you could add it on to a good dip. So this is the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Today, I'm going to talk about knife catching. I created a strategy a couple years ago called the sneaky snake trading strategy, where I try to catch the pullbacks on my stocks that I'm trading. It's all about chart patterns, moving averages, and being in the now. Being in the now is very important right now, especially during the crisis that we've had with the Fed and just the geopolitical stuff and everything that go along with it. I want to wish everybody a happy 2023, and we're going to give this a few more minutes for people to show up and see if they want to learn how to catch knives. I'm probably one of the best knife catchers out there, at least I think I am. And that's part of it. You got to have confidence in your trading strategy. So again, I developed a strategy where I look for pullbacks. Maybe a 52-week high, and they decide to pull back a little bit, or maybe hit a 3-year high and look for a pattern that I think that will allow me to catch a knife or have something to pull back. But today we're going to talk about how to catch a knife on a scalp or a day trade. When you have a knife and you're sitting there and you're in a NVIDIA, and all of a sudden you get this big sell-off and you're stuck in this trade, and it's too late to get out. But I'm going to give you ideas to where you might be able to recognize an exit idea before that knife even happens, and then how to catch the bottom of the knife. Knives are, most traders say don't attempt to try to catch a knife, and that's true. You don't want to catch a knife. You'll cut your hands up. And I'm going to show you a bunch of charts that could have really made you a lot of money yesterday in the market, if you're able to wait and have patience and wait for that catch. I give Pow a lot of credit. Not that he's doing a good job, that he gave me the opportunity to learn how to do this. I've always been a bottom player, like a fish, like a carp in the water, cleaning up the bottom and scalping them up or swinging them up to an upside trend. So I see your irrational exuberance and raise you pain. And a lot of people had pain back in 2022. The fat cats were saying, buy the dip, buy the dip, buy the dip. And then it kept dipping all year long. This year they came out like bandits. It can only go on for so long. So I'm going to talk about how to catch these knives and what to look for and what to expect. How to really chime in and know that you've hit a bottom, that you could have a reversal pattern. And we're going to talk about that here in this here video. I've been talking about the moving averages, how to look for a reversal in a moving average. I use the 9 EMA and the 21 or 20 SMA, the 50 SMA, the 51 EMA, the 65 EMA, and one of my favorites is the 200. And then beyond that, I got the 300. Simple moving averages. Now they act different on different time frames, so you got to take that in consideration. But you want to keep the eye on the 9. So the secret to catching knives. I did a little video on this here on the NVIDIA trade that we did, so you might want to go back and watch it. Knife catching means buying a stock that has fallen sharply, catching it at its bottom. I mean, you got to wait for the bottom to hit. And I'm going to give you indicators and ideas on how you can determine when you hit a bottom, then gain off that rebound in price action. Nvidia was a great trade. There was a lot of good trades. A lot of this AI companies right now, they're very hot. They've got this market steaming, and the bulls are very bullish. So they've been bragging and boasting about Nvidia about every day. Now I've got a couple watch lists that I use. Let me see which one I got here. We'll just start off with this tech watch list that I got. And I've got my top 24 watch list, which I'll talk about maybe a little bit later. But just this watch list alone, you can see it's all red, all but Microsoft. But the whole market had a sell-off on Friday. And that's the way it happens. When you get these days where everything just kind of pulls back together, it's some of the best days to be looking for an opportunity to get into a trade, especially when the market's very bullish and everybody's bullish. You know, they want to break these levels. And you know what I'm talking about. The 3-year high. So we're going to look, just to look, and to give you some idea. Whoop, I didn't want to do that. Get back to my camera here. Man, looking good. Gotta look pretty. So, for example, you got the SPY. You pull up this 3-year chart, and this was a great trade too. And we've hit like a double top on the weekly time frame of the SPY. So I knew way in advance. I knew before we even got there that this is what we were going to hit, and we were going to consolidate into the new year. And we've had nothing but what, an 9 week run in this market to where it's just run straight up, and that's irrational exuberance. Needs to consolidate some. And it ran and it broke out because the Fed came out and said that he was going to halt on raising the rates and that they were looking forward to maybe cutting them this coming year. So where did I put that watch list at? Same as the SPX. It was also up there at the high. So you know at a double top, and this is true when I go to the intraday or the day trade, a double top would be like an exit idea, and to maybe start looking at a pullback. The SPX, the same thing. We had a double top up here. I'll draw the price line across. And I used the body of the candle, and then we jumped up past that body a little bit at 47.81 with an all-time high at 48.18. If you heard the Fat Cats on CNBC, they're talking about that resistance level. We're only 16 points away from the SPX all-time high. Well, I use the bodies of the candles when I'm charting, and then I use the wicks as a backup, like a fiddle on a guitar, or not a banjo, but a violin. You've got the strings up on top of the violin where you tighten the strings up. Then you got the bottom part of the violin where you fine tune it. So that's what I do with the bodies of the candles and the wicks. Same thing happened right here. We called a reversal. This is called a head and shoulders. Let me get this other. I'm using the body of the, whoop, I've got to extend that out to the right. Using the bodies of this here, this is called head and shoulders. So I'm going to walk you through chart patterns to recognize when you catch a reversal on a knife or when you're at a top and you think you might see a pullback. See, I'm looking to see a small pullback into January, maybe February, and come back to this old resistance and then come up for the third time and break out. So I'm going to use this shoulder line of this head and shoulders as a support. So I'm calling the trade out before it happens. Same thing happened here. We had a left shoulder, right shoulder, and we hit that shoulder line, and I called the pullback. I said, get ready, we're going to pull back. And we found support off the 21. Bounced up a little bit, then came back down to this other inverse head and shoulders right here. Popped up a little bit above it. And that's when Pow Pow decided to go ahead and give his speech. And then we just went ahead and ran up. So I told the room, I said, hey, we're way before he even come out and said it. I said, I don't think he's going to be raising these rates anymore. Because by this time I was already pissed off that he's done it too much. So we went ahead and rebounded to the double top. And the same thing happens, you know. This is a head and shoulders. And then you got an inverse head and shoulders. When you're looking for a knife to catch at the bottom, now I'm just using this weekly time frame. So right here we've got another inverse head and shoulders, which is just the opposite of the head and shoulders. And this is a bullish reversal. So as we come down and we hit the 200, we know on this weekly time frame we're getting ready to bounce up. The 200 SMA is a very good indicator. On different time frames, you can use it in different ways. In this case, we used it as a support level. We had the left shoulder, right shoulder, and then that second touch on the right shoulder, boom, all the way back up to the shoulder line. You took one shoulder and brought it up to the other shoulder. So when you're charting stocks and you see patterns like a head and shoulders, you need to realize that could be a hard resistance. There's not too many traders out there that will tell you that. Same thing's down here. It became a solid support. And it bounced up twice. So when it come back down, you could more or less tell yourself, I think we might come down here and hit the right shoulder 2 times. So when I talk about chart patterns, you got to learn these chart patterns. If you want to, copy and paste this down, put it up in front of your desk, and study the reversals and watch the charts and notice, look for the patterns. You know, we got a descending triangle. And this is what I'm going to show you on NVIDIA, how I realized that we were going to have us a good knife. You have a rising bearish flag. You have a rising wedge. You have a symmetrical flag coming, and these are all coming from a knife. But you know that these patterns can be bearish in most cases, but not always. That's when you got to step in and be in the now and realize, okay, this shouldn't be doing this today because everybody's bullish on this stock and just got good news. I think people are just going to take profit and we can jump in this thing and run it back up like the way NVIDIA was on this bear flag. Continuation patterns. So these are patterns you want to look for when you're coming out of a snake. You've got an ascending triangle. You've got a bull flag. You've got a bearish wedge. This is a bearish wedge. A bullish wedge, I mean. Same thing as you're seeing right here. But when it's coming down, sometimes if you count to 3, and we failed like the 3rd time up here, and it comes down one more time and bounces up and breaks out on that 4th breakout. But you got to count to 3 sometimes for that thing when you're looking at something like this. But this is going up to an uptrend. In most cases, that'll always squeeze out and go to the upside. And then you got your head and shoulders. You've got your wedge. It's a rising wedge. You've got a double top and a triple top. Then one of my favorite patterns of all time is this inverse head and shoulders. Now this thing can really make you a lot of good money, especially in this market right now. I'll show you many a time frame, many a charts when we get ready to go through that watch list of what to look for. You have another that looks descending, but when you're coming out of a knife, just the opposite of this thing can easily break up to the upside. So it's an iffy, this is a falling wedge. That means that the lower lows are going lower compared to where the lows are just going sideways. And that's a wedge. That's one of my favorite patterns too when coming out of the snake or out of the knife. We got a double bottom and we got a Darvis box triple bottom down here. if you ever learn how to play a Darvis box. So recognize these patterns, put them up on the wall, and then you want to, while you recognize these patterns, you want to do something else too. You want to be watching for the candlesticks. You want to look for what kind of candlestick patterns are reversals. You know, I talk about the 3 black crows a lot in a knife. Like you got 3 big old engulfing candles coming down, and a lot of times that's a sign of a reversal to the upside. Like you see right here, 1, 2, 3. You create some kind of bullish candle down here, which could be a doji. It could be whatever that Marabuzubu is, or just a regular doji. These are all stars, long leg dojis, and spinning tops, hammers, big hammer. Like right in here, you got the dragonfly doji. You got the hammer, inverted hammer, spinning top. Then you got the hangman for the downside. You got the shooting star going down. You got the gravestone doji, which might tell you with that wick. The wick tells you everything you need to know on these candles, whatever direction that wick's in. And I've been playing this bullish harmony we caught at the bottom of the J.P. Morgan. I might pull that one up for you and show you. And I swung that all the way up to the upside once we hit this moving average. Tweezer bottom is one of my favorite reversals. When you're coming out of the snake, out of one of them patterns, the tweezer bottom. Then you got your bearish things right here. This bearish harmony, I don't know. I use a TTM squeeze chart, so when I see them, I'm kind of anxious maybe to see the upside, but it depends on the market conditions. So copy and paste that, learn them cattle, and Google. You can Google like bearish and you can get diagrams and ideas of reversals. You can kind of do your own research. Now, every good trader does his own research. They never copy someone's trade. They got to have a reason to get into the trade, and that's what I want to try to share with you today. Like I'm good at what I do, but I'm saying if I call out Apple, we got a reversal here, and I'm saying, and I'm going to have a reason behind it. I'm not just going to jump into the trade and wish for the best. I need confirmations. I need 2 or 3 of them sometimes. And when I see 2 or 3 confirmations on a knife catch, I'm going, yeah, this is it, man. There's no other, it's going up. It's going up. Inverted hammer. We had the knife, inverted hammer, she jumps up. You had long leg doji coming out of a snake. You have an engulfing candle coming out of 3 black crows. You have a spinning top or long leg doji up here at the top telling you you might have an exit idea. So study that one candle, and I'm using the 1 minute time frame a lot of times, maybe a 3 minute or a 5 minute spinning top. Kind of gives you an idea. Maybe we're going to have a pullback because you got all these big body candles, rolling pins, and all of a sudden then you get a squeeze where the buyers and sellers are starting to question themselves. Are we at a double top? Are we at a triple top? Are we at a shoulder line? Do we have a rising wedge? Are we in a bear flag right now? And the thing's telling us we're getting ready to get out of the trade. So keep that in mind. You can Google bearish and bullish. All these little things add up when you go to try to catch a knife. Candlesticky. Now this is just the opposite. I mean, you get you a cheat sheet going. You got 3 white soldiers. Usually when you have three white soldiers, you'll consolidate. That's a good idea maybe to take some profit and then catch the knife or catch the pullback. Might just pull back to the second soldier at this tweezer and bounce right back up. Shooting star. You got in hammer. So look for them reversals. Look for them candlesticks. So we went over the chart patterns. Type in bullish, bearish candlestick chart patterns when you're doing your research, and then same thing with candlesticks. So I'll remind you, we talk about chart patterns, moving averages, and being in the now. So let's go ahead and pull up a chart. We're going to use the TTM squeeze for right now. And I'm going to pull up my little watch list here. I got a tech watch list that I'm going to be using this year. And these are going to be my top tickers to start out with, and I'll subtract and add on to this. But these are some of my beginnings, and this is my total watch list for into next year. And I'm going to use this watch list, and I go through every one of these tickers every day to look for which one's pulling back. And I simply do that by hitting the percentage sign up here and looking for the biggest knives with the highest percentage. And even the ones I like, which, don't knife as much. You got MU, AMD, CRM's had one heck of a year. Salesforce, it's at almost all-time highs. So let's go to the 1 minute time frame now. We know how to catch knives. We know that we need to look for patterns. Here's your inverse head and shoulders right here. As this thing starts to break out, it pulls back. So you take and draw your trend line to the left shoulder, to the right shoulder. Once it pulls back, this is your neckline on both of these stocks. Inverse head and shoulders. And then boom, run it all the way up here to this here top. And then you got the high up here, but here's your head and shoulders right here. Extend that out to the right. And that's your hard resistance where you want to take this trade. And that's going to be CRM. But maybe it wants to pull back and hit the 9. But the bottom of the snake, you got an inverse head and shoulders, and that would have been a key idea to take that trade right there and run it up to the 200 and get out of it. That 200 on the weekly time frame acts like a pivot point. It acted like support. It acted like resistance. So right there is telling you that we have a real hard resistance to break. And it did. It consolidated and created an ascending triangle and popped right out of there. So now we're going to take this to the 1 minute. Even I bet you this trade would have been a good one. But this has had such a great run. I'm being in the now because I know this thing's had a notorious run already from the 200 all the way up here. And this is what you call triple bottom when you're looking for stocks. This is where my 1, 2, 3 comes in. So if I want to catch a knife or I want to catch a pullback, we've got a falling wedge. That's a falling wedge. You've got lower lows, lower highs. It squeezed out 1, 2, 3, 1, 2, 3, boom. So I've got the saying, if you can count to 3, you can trade with me. And if you look at the calendar of this year, the 12th month, the 31st day, the year of 2023, year of 23. So if you add that up, 1, 2, 3, 1, 2, 3. Jot it down on paper. 12, 31, 23. And you'll see, and you cut that in half, it says 1, 2, 3, 1, 2, 3. And that's the kind of year we've had. And I've been calling these trades out every time I see a 1, 2, 3. Inside these patterns, especially. And just by knowing that little bit, I was able to make all kinds of trades. So if you can count to 3, you can trade with me. So we're going to take this to what we saw Friday on the 1 minute time frame. And I'm going to pull up my little watch list here. And I'm going to go through every one of these tickers. We're going to talk about AMD, QQQ, Amazon, PLTR, NVIDIA, Intel, Google, Microsoft, Meta, Path, TSM, FTNT, and PON. And there's a few more that I should add in here that I'm really bullish on, like Meta. What else we got in here? IBM, been pumping here lately. We got Intel, I got it in here, good. So we're going to start off with AMD. Now this is what, or let's start off with NVIDIA, because this is the one I really like to talk about, that descending pattern. And everybody's watching NVIDIA. It's the number one ticker out there besides Tesla. Everybody's bullish on NVIDIA. I mean, it's non-stop talk and volume on NVIDIA. And they've called this target out for 5 or 6 months to go to 650. And it hasn't done it yet. It will go to 650 this year. So, right out of the gate, we started with a descending triangle. A descending triangle, and it's on that pattern, and that's a bearish flag. So by the time it got down here and started to squeeze and drop down below that little that trend line, you had that big candle, you had that big knife, and you could see that it was getting ready to do it in advance because it was starting to squeeze. Now this is, like I said, I take the bodies of the candle, and we had a 1, 2, 3, and it failed. It came on down. Then we had a 1, and the bodies haven't hit here yet. We had a 1, 2, 3, and it failed. Started to squeeze. So I knew that this was a descending flag. So we started the snake. I'm going to go ahead and clean this all up. I'm going to draw these flags in. I know that's a descending flag, and once we broke down it, we come to the snake, we come to the knife. This was a huge knife. It lasted what, 5, 10, 15, 20, 25, 30, almost 40, 50 minutes, an hour. So you're sitting here watching it, think, I'm going to catch a knife right here, man. I got the patterns. It dropped out of the snake. I think I'm ready. Now, a snake is nothing but a trend. So I'm going to draw that pattern in here. You got to have some kind of guideline. So that's the trend. That's the snake. As it starts to come down, you're looking for it to break out of that trend. You want it to break out of that trend. Now, this trade gives you all the time in the world to take this trade. You don't have to rush when you're catching a knife. Be as patient as you can until you get a confirmation. And I'm going to show you 2 or 3 different confirmations on where to take this trade. And every one of these that I'm going to pull up is going to have almost the same kind of pattern, because the market and the money makers, the market makers, are all buying it at these certain levels, and all the tickers are thrown in one. So they got the algorithm set up to where they push a button, and you've got all these tickers maybe just on the Russell 100 or 1000 that will all jump at the same time. So we pulled back and we started to break out of that snake, out of that trend. And not ready to take the trade yet, but we know that it had its first pop out of that trend. And it came back down. They always reverse, okay? When they break out, always, 99.9% of the time, they're going to question the breakout and they're going to pull back. You got a lot of rookie traders trading this market, and you got a lot of experienced traders that know what they're doing. So we pulled back, and we fell back into that channel. So then we came out again out of that channel. Now this time we started a pattern. We have a small little pattern here working. We've got what you call an ascending triangle. Comes down and creates an ascending triangle. This is on the 1 minute time frame. And now you know that we're bullish. That's our first bullish candle right there. Even the tweezer top here was telling you not to take this trade. This is tweezer top. So that's still bearish. If it was at the bottom, it would be a different story. So you broke out, you pulled back, and now you recognize that we have an ascending triangle here and that we might have something good to go. Like I said before, they always pull back. So you're coming out of this snake, out of this trend. You're coming out of this trend right now, and we pull back. They always pull back. So you got your flag and it pulled back. Now, pay close attention to what we got here. We got a higher low. It never did complete and go to the double bottom. So that right there is telling you that we're getting ready to have another breakout. Now, Jim, well, I think we're getting ready to break out. I say, oh, let's have a little bit more patience here. Let's see what happens. We got all the time in the world to take this trade. This market's very bearish today. We're going to have a lot of people worried that this thing might not bounce, and they're going to take profit on this first breakout. So we would create a different flag. We create 2 or 3 different flags in this bottom right here. We have an inverse head and shoulders. Right here. Let's do this a little bit better. So here's your head. Here's your left shoulder, and then your right shoulder. We extend that out to the right. So there's your inverse head and shoulders. Here's your neckline. This is your head, your left shoulder, your right shoulder, and then your right shoulder off the neckline of this inverse head and shoulders. You also have an ascending triangle. As we come up to the top up here, we found a resistance at a double top. So now you've got also an ascending triangle. So when this thing pulls back, after you created your triple top up here and it pulls back, it lines up with that neckline of that inverse head and shoulders and bounces off the ascending triangle. You see that? So the time to take the trade, to be very positive about it, you got all these confirmations right here. You've got the neckline, you've got the bottom higher low, and you've got the ascending triangle. 1, 2, 3. Boom! So you took his trade, and you got in right around 370. I forgot what call it was I got in. And I run it all the way up to a double top. 1, 2, 3, knife. 1, 2, 3, or even a double top. So you're looking at chart patterns. That is the key to this game. You get in them chart patterns and learn how to do them chart patterns, you know that you hit a double top. It's time to get out of this trade. You also hit a bear flag. And you also have a bear flag up here with a 1, 2, 3 top. So you got out at the top of the very best time you could get out of the trade. It's not always going to be like that. So you want to get out maybe at the first sign of a double top or even close to it. And look at the profit that you took on this trade. It took time. You had to sit and watch it, but you realize once you get out of this snake and you start to identify patterns, it's consolidating. This is all bullish. Every bit of this here is bullish. From ascending triangle to inverse head and shoulders to a, to the neckline of that shoulder. So that's basically, what you're looking for. And you're going to get different kind of patterns. You might get a falling wedge. What am I doing? You could get like a falling wedge here and recognize this, a symmetrical flag. Let's clean this up. And say you're sitting here and you're saying, Jim, I just got to the game and I'm seeing a symmetrical flag out of the snake. And I'm telling you, if you can count to 3, you can trade with me. 1, 2, 3, boom. 1, 2, 3, boom. It's all about threes. Threes is a very important number when you're looking at patterns, chart patterns. So you broke out of the snake and then you realize that we have higher lows and we got a symmetrical flag coming out of here. Or you do this. You want to get in a little bit earlier. One, two, three. She goes, she breaks out, then she pulls back. Hits that bottom of that trend line. All symmetrical flags. So you've got to run these trend lines across. And you got to have a confirmation. 1, 2, 1, 2. You got to have some kind of balance there. One ain't going to do it. You need to have, like 1, 2, and just draw that trend line on out. Extend this to the right and see where this thing goes. Right into close. So you could have shorted this stock once you realized you had the double top up here and 1, 2, 3, and you wanted to catch this knife. You wanted to take this knife down into close. You got your reversal because you got this triple top. Just follow that out. Right into close. You hit that trend line. That's an exit idea. Then you had 3 black crows. Well, I thought I saw them there. But then you had to spin and top for the reversal to the upside. So let's go and talk about a few more of these stocks that's on that watch list. And we're going to draw these snakes out. I might be a little fast for you. AMD. So we had a big knife on AMD. Now I got to look at a bigger time frame here. I want to see maybe what's going on. If we got something way in advance up here or something that might hold that up. I don't see nothing. So right out of the gate, we've got a 1, 2, 3 here. We've got a symmetrical flag, and all of a sudden we realize that our stocks are knifing. It didn't hold the double bottom, which is right here, and we have the continuation of the snake. Let's clean this all up. Once it failed support, there's your trend line. You can see where it stopped, stop, 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 and then stop. Or you can just draw it all the way across. Still, you know that this thing's going to breaking out with a flag and we could have a downtrend. So once it breaks out of that pattern, then you want to draw your other trend line in. So we got the snake. We broke out of the snake, but we're not ready to take the trade yet because we don't have a pattern. We have a small little ascending triangle, and we know it's going to pull back. Everything pulls back after it forms a pattern. Not always, but you got to keep that in mind. And we're going to draw that all the way across. That is a resistance line. And then there's your little flag right there. So you're looking for the pattern once it breaks out of the snake, out of the knife. And then she decides to go ahead and fail, and it drops on down, creates a double bottom. Now we know that we've got a kind of a setup here. We got a double bottom with a higher low. If you move this all the way across, it's formed an ascending triangle. So on the 1, 2, 3, it failed. It dropped on down. So that trade wasn't ready to take yet. You might have took it right here and run it up to a double top and get out of the trade. And just get out of the trade on the 1, 2, 3. 1, 2, 3 on the 1 minute time frame. And what you got is another flag, just the opposite after a knife. It's a symmetrical flag. You have an inverse head and shoulders. You have the right shoulder, the left shoulder, the left shoulder, the two-headed snake, right shoulder, and right shoulder. So that's inverse head and shoulders. As it comes back down and you say, Jim, I think we got us a triple bottom off the shoulder line. 1, 2, 3. They don't have to be perfect. Triple bottom coming out of a trend. Is I'm not looking at anything over here. Unless we do have a big candle that came down there, and then I'd have a good confirmation that this could hold right here. So you come in here and you say, Jim, we got it. This is it, man. We're on that left shoulder, that right shoulder right there. I think she's getting ready to bounce. Breaks out, comes back, creates another shoulder line, and then boom, all the way to the 200 or to the 300. SMA. So that's one way. You got to look for the patterns. Don't rush. Don't ever rush in this trade unless you're going to scalp it real fast. If you don't have a pattern, you don't want to take this trade. You could have took it right here. AMD got in the trade on the third dip and run it up to a double top and get out. And then get back in it at the shoulder line. It's all about patterns. Next one's the QQQ. We had a huge knife on the QQQ. So you got your flag, consolidation, kind of like a Darvis box. She fails that Darvis box, then falls down, creates a knife. So you get in here and you draw your wedge or your trend. There's your knife. Now it's started to break out of the knife. You come in here. This is when the first trade that I ever figured out I had something real great. Snake, break out, pull back, double bottom, boom. Created a fallen wedge, or it created a descending flag. You take the top of this, run it up to this, then you take this and run it up to that. You got a higher low. This is called a falling wedge. 1, 2, 3, boom. Get what I'm saying? It broke out of that thing, out of that flag, out of that fallen wedge. Broke out, pulled back. Boom. They always pull back. Run right into the 651 EMA and the 65 EMA and the 21 SMA. So I had 3 confirmations to take that trade. Then you run it up to the 200, get out of the trade, or once you hit the 200, double top, pulls back, finds support again off that 51. Now pay attention to what we got here. We got the 9 EMA. So we got the 9 EMA and it's very bearish. Then finally it breaks above that 9 EMA. The 9 crosses the 21 SMA, which gives you another confirmation that this trade is good. So instead of using a flag, a falling wedge, we're now looking, or a rising wedge, we're looking at, whatever, it's a flag. The 9 crosses the 21, pulls back, respects the trend line. You got a 1, 2, 3 right here. Boom. That 9 crosses, and then it respects the 9. Then it loses respect. And that was the time to get out of that trade if you held on a little long. Then it's gained respect of the 9 and runs up to the 9 and it disrespects it. So once that 9 breaks down and you get a full body candle below it, you want to get out of that trade. The next one, Amazon. Everybody talks about Amazon. It's going to really pop. Same exact pattern. We've got a bear flag, and then she breaks out of that flag, double top. She got a double top. That's an exit idea to get out of this trade. If you took this little bitty beach trades, what I call it. I come in here in the morning, I call out these beach trades because I'm looking at these candles. And then I recognize a double top. I'm going to get out of that trade. So here we go again. You got to be patient. Let the chart do its work. There's our snake. We broke out. We created an inverse head and shoulders. There's your head. There's your neck. We got a falling wedge. We got an inverse head and shoulders. So she breaks out. She pulls back, creates that right shoulder. Boom! To the 200. Get out of the trade. When you hit a moving average, and like the 300 or the 200 on the 1 minute, you want to get out of that trade. So you're looking for a pattern. You're looking for candlesticks. We got a spinning top. We got a harmony right here. We got a harmony right here on the 1 minute time frame. We got a 1, 2, 3. 1, breakout, 2, 3. Boom. That's Amazon. PLTR. Now this is definitely a bottom play right now to me. So again, the same kind of pattern. These are all running like the same. This has to all deal with AI. In fact, I'm going to put AI on the watch list right now because I'm thinking about it. Artificial intelligence. So we're going to outsmart these suckers. So we got a bull flag, a bear flag, we break out of the bear flag and it creates the knife. So we got to look for a pattern. Here we got the 1, 2, 3. We've got another descending flag coming on down. At the bottom, that's the different, mind you. It's not even an ascending flag, it's a symmetrical flag. It's a wedge. So we break out of the snake. We break out of the snake, and it decides to go ahead and pull back like they always do. And then it breaks out again. Now this time we've got 1, 2, 3. 1, 2, 3. Boom. If you can count to 3, you can trade with me. Run it up to the 200 or the 300 and get out. Using the moving averages as a resistance, or using a chart pattern as a resistance. Now this is PLTR. So I'm going to pull this up to a 20-minute. And what do we have here? We have a falling wedge. We have a falling wedge. 1, 2, 3, boom. Pull up the yearly time frame. Solid support for a whole month and a half. Solid support. Put the price line in here. There's my confirmation. See how this found support? Support, 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 support. All the way across. Now this is getting ready to squeeze to the upside. Or we could have a 1, 2, 3 down here. And a sharp knife for a real strong buy. And I like to I use this trend spider. To try to find out where my money flow is going at. PLTR. So I know the money flow is right around where that support level is. These are the heat map to tell you where the big money is. It's right around 1750. So I'm almost positive we've touched down here so many times that this thing can pop back up and hit this here wedge. So it's a falling wedge, and break that resistance and move on up and try to get past these other ones. Maybe a target of right around 18 bucks. So that's Trend Spider. I mean, you have to get a subscription to them. It tells you about chart patterns. I mean, it can identify patterns for you. If you're a rookie and you want to learn how to identify patterns, it gives you candlestick patterns. You know, I got like a 1, 2, 3 reversal. I got 3 black crows. You got harmonies. Morning star. I want to catch these reversals. In fact, I'm going to put tweezer in here. I love to catch them tweezers. Top indicators of my moving averages. Trend. So I'll catch the money flow and I know about where everything is. We bounce up here, maybe consolidate and have a breakout into 2024. That's on the 1 hour time frame. So that's called trendspider.com. So now we've come back and had a double bottom down here. So maybe we come in tomorrow or Tuesday and run this back up to resistance right around 1735 and see if that breaks. In the video we did, we're going to do Intel. So we've got Symmetrical flag. You can tell things were a little choppy that morning. You draw in your knife. Once you break out of the knife, we've got an inverse head and shoulders down here. I tell you, this inverse head and shoulders will change your. If you don't know what an inverse head and shoulders, you ought to know why now. And you'll see them over and over again. So we break out of the flag, we pull back a little bit right here, and we shoot up straight to the 200, and we get out of the trade. Yeah, oh yeah, I mean, it went up more, Jim, to double top. Be glad you got out of that trade. Intel is on fire. They're building a big, huge plant in Israel with, I think, they're going to put $18 billion in this thing. If Israel's on the map. I mean, it's not going good out there at all. So you break out of it, and you've got your pattern. You've got your inverse head and shoulders. You got to came back and hit this resistance, pulled back and respected that resistance level. Run up to the 300. Pulled back and hit the 51, and then went ahead and did its thing. And here you have a wedge. Symmetrical flag. 1, 2, 3, boom. 1, 2, 3, boom. Google. Same thing. You got a bull flag, a bear flag. Breaks out, pulls back, 1, 2, 3, fails. 1, 2, 3. You count to 3. You can trade with me. Then you go ahead and you draw your little your snake, your knife. Everything was knifing. So anything that you watch that's really hot and on fire, and you're really bullish on it, and all of a sudden you come in here Friday thinking we've had a great year. I heard people losing millions of dollars on Friday because they held their positions into next year. And I warned everybody. I said, but you got to worry about tax season. Maybe they knew that, it was just going to be short-lived and we're going to bounce back up, especially when the market's very bullish. So we got the snake, we broke out, we pulled back, we created another inverse head and shoulders. Created almost like a bull flag right there. See, coming out of a snake, and that's a bull flag. As it's going down, as long as it's going down, you're a bull flag. If it started to break up to the upside, you know you're going to have another pullback. So we got the left shoulder, two-headed snake, right shoulder, and that's time to take the trade. Run it up to the 300 or the 200. See how it respected the 200 here? Once it hit the 3, came back and hit the 2, swallowed it up, boom. Then you got this resistance line right in here of an inverse head and shoulders. They're everywhere. If you can spot them, there's your head, your left shoulder, your right shoulder, boom. Another one. Come on, you idiot. But this is too late to close. You could have probably got in this trade and made you a good little amount of money, But I mean, if this was like the SPX and it bounced, you found resistance, resistance, resistance on the 300, and you found support on the 300 right here. Bounce it up into close, get out of it in a few minutes with, if it was the SPX. The next one, Microsoft. Microsoft had a knife too. You had a bull flag, bear flag. Bear flag is when you go up. Failed the bear flag, started to fall. So you drive in your snake. If you can count to 3, you can trade with me. Wubbits, tubis, and a freebie. And she breaks out. She decides to pull back to a double bottom. Now you got your pattern. You decide to take the trade. You're at the very bottom of this trade. You got the day low. You run it up to the 300 or even up here to close to a double top. Take and run your trend line. Extend that out to the right. Boom, baby. What happened? You took a triple top exit idea. Everything's about chart patterns. I've argued and argued with people, the fundamental traders. I don't do fundamentals. 1, 2, 3, boom. 1, 2, 3, boom. 1, 2, if you can count to 3, you can trade with me. And then you find resistance off this triple top, and you're out of the trade. Meta. We got a flag. I want you to share this video when I'm done with it. We got inverse head and shoulders. You got the left shoulder, head, and the right shoulder. It fails on the second touch. There's your left. So now you draw in the snake. You break out of the snake. She pulls back to a double bottom or an inverse head and shoulders. Jim, we pulled back. Should I take the trade? It's up to you. I might take it and take it up here to the double top and get out of the trade if it didn't hold up. But you got your inverse head and shoulders right here, and it pulls right back to the second time. So if you had the patience and you came in, you got in there and you went in there and took a shit or something, go made lunch and came back and said, oh my God, we're at the right shoulder here. Boom, back to the 200 and to the 300. The 200 acts like a pivot point and a resistance. Resistance here, resistance, support, 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 support. And every time you touch that 200 and it held, you stay in the trade, run it on up. So you're looking for a pattern. You have a falling wedge. 1, 2, 3, boom. 1, 2, 3, boom, to the 200. This is the falling wedge out of a snake. AI, straight out of the gate, you can tell it's going to be bearish. A sloping, descending triangle. So you count to 3, 1, 2, 3, bam, drops. Now you draw in your snake. She breaks out. I always say don't rush into this trade because it's going to pull back. So it pulled back and it fell. Then you got a falling wedge. Come on. Another falling wedge. You got like 5, 10, 15, 20, 25, 30, 35, 40, 50, an hour and a half of waiting. And you decide to count to 3. So you go 1, 2, come on, you're being stubborn today. 3. And she breaks out on that third time. Runs up, hits the 200, respects it, and then goes to the 3. Almost every breakout has been like this. It hits the 200, SMA, pulls back, respects the 200, bounces off the 50, SMA, and then runs up and hits the 300 SMA, and you're out of the trade. Path. Same thing. All these AI stocks have had a huge run. Irrational exuberance. So it's a great opportunity to jump in these knives. So you have a head and shoulders. And it didn't break that shoulder line. Then it pulls back. Drawing your knife. And you're looking for candlestick patterns. You might see 3 black crows. But this was just all about breaking out and stuff. So here you got another falling wedge. If you can count to 3, you can trade with me. 1, 2, 3, boom. 1, 2, 3, breaks out. If it doesn't break out on that third time, you might want to question. This is a bull flag, not a wedge. It could be a wedge, but it's a bull flag. It might be a wedge. Yeah, it's more or less either. It's a bull flag. So she breaks out the third time, moves on up, hits the 200. Runs into the 3. Decides to pull back to this inverse head and shoulders. Left shoulder, right. Extend that out to the right. Boom, baby. Could have shorted that at the double top or the triple top. 1, 2, 3. Back down to that shoulder line of this inverse head and shoulders. TSM. Another snake. One, two, three, drops, creates the snake. This is just example. You're going to have days like this next year where the whole market just sells off 500 or 600 points. Maybe because of geopolitical news. Maybe because that's about the only thing I can think of right now. Geopolitical news. Because everything's so shitty out there right now. I'm going to redraw this snake here. There we go. So if you're using the TTM trend or whatever pattern you use, this is called the TTM trend chart, and this kind of tells you when the bears are in control, and then it tells you when the bulls are in control. So we're watching the 9, and we have not broke above that 9 at all, and we're still inside the channel of this trend. All of a sudden we start to break above the 9 and we cross the 21. So this is an early indicator for me to take this trade right here. Once we start to develop a trend for a scalp, we've created an inverse head and shoulders. It came out, broke out, and then you got the right shoulder and the left shoulder. And there's your head. Here's your neckline. Yeah, it could be right here. It also could be right here as she started to break out, but yeah, because it pulled back off that neck. And then she breaks out to a double top. Anything outside of the trend, and you get out of the trade. It runs up again, hits the 200 and the 300. So catching the knife, watching the candlestick pattern, we got a spinning top right here, and we got a dragon, inverted hammer. That is TSM. How come it's not on here? Oh, it's doing that crapping on me again. Listen, here's FTNT. I just added this to my watch list, so I probably wouldn't have traded it. Seems like I should have more on here. So we got a symmetrical flag. She fails the 1, 2, 3. Breaks on out, breaks down. You got to wait for it to break out of the pattern. So there's your snake. She decides to break out. She pulls back. Creates the pattern. 1, 2, 3, boom. 1, 2, 3, boom. If it goes 4, if it goes to 5, give it up. Give it up. You want to get in at the heat of the moment. You want to get in at the squeeze. When the lower band, the higher band starts to squeeze and the lower band gets together with higher lows, you're squeezing, and it's going to do something. It's going to make up its mind. The tighter you get to that triangle, the end of that triangle, that's where you got to really be on your toes. Because if you don't, it comes down here for the 4th time, you could get a good knife. But if it breaks out on the 3rd break, boom, baby. If it didn't break on that 3rd time and it comes back down the 4th time, you got to be a little leery. Then you run it up to the 200. Jimmy, he might would have got in here a little bit sooner. Depends on the stock, what I'm watching. pawn, P-A-W-N. You got another flag right at the gate. You got to look for the pattern. The pattern's the secret. So we got a symmetrical pattern now. The gate, and she broke. Then if you were in this trade at open, you'd get out because it broke that support level. Not saying it could have bounced off a double bottom because it did stop there, right at open. It took a few minutes and then said, hell with it. We're going off. We're selling off. So then you go ahead and you get in here and you draw your pattern out. One, two, three. You got an inverse head and shoulders at the bottom. This is on a 1 minute time frame. Now I've been criticized up and down by so-called novice experienced traders that I don't know how to trade because I use a 1 minute time frame when scalping and day trading or looking for a possible lowest support that I can get into the trade. I've been criticized and hated because I use the 1 minute time frame. I don't know what I'm doing. But I know what I'm doing, but you would hear different. So we have an inverse head and shoulders. Now you probably couldn't have recognized that on a 5 minute. It would have been a different kind of pattern. And I would have probably got in this trade too. Or a 10 minute, a 15 minute. You had on a 15 minute, you had a spinning top. So you would probably got in that trade right there too. 30 minute. Tweezer bottom. One hour. Long leg doji. So let's do a trend line here. This would have told you to get in this trade right here if you used a 1 hour time frame. I go to the 1 minute. I got in this trade way down here. You got in that trade right there. Five minute. Who knows if you would have got in this trade down here on the tweezer bottom. Come on. That's the 5 minute. So yeah, that would have been a good entry on the 5 minute, if that's what you want to use. But you would be looking at it totally different. You'd probably be looking at tweezer bottoms all the way through it. There's your entry. There's your doji right there. So yeah, a 5 minute would have worked well, maybe in this strategy. I'm not cutting down five. I use all kinds of time frames. You know, I'll go back and use a month, weekly, daily, hourly, 15 minute, 5 minute, 3 minute, and a 1 minute. And every moving average is different in that time frame. So if I'm using, let's say I'm using the 5 minute, and I want to use a moving average as an exit idea, that would have kept me in there to the 200 maybe. Now if I used the 1 minute, so my exit idea would have probably been up here on a 5 minute. Now on a 1 minute, my exit idea would have, what was that 5 minute at? Let me see here. I'm going to change that color. What'd I say? So I'm always learning. Yeah, I definitely probably made more money using the 5 minute on that one. Because maybe I would have got out here at the 200. But if I was going to take the 5 minute, my exit idea was the 200. But then maybe I would have got out at the 51. But I see how it respected the 200 up here, so maybe that would have been a good idea. Might have to use the 5 minute a little bit more often when I'm catching the knife at the very bottom. So that's it. Remember, and I'll ask questions. Remember, you got the candlestick patterns you got to learn. You got the chart patterns you got to learn. And catching the snake out of a knife, you're in for home business. Is there a script to draw falling knives? If you use a trend spider, like right here, no, not falling knives, no. I don't think there is. 3 black crows. Let's say you had 3 black crows and you put it on maybe a 5 minute time frame or a 1 minute. But I think you have to just keep a good watch list and go over your stocks all the time. And if the market's down 200 or 300 points, or you want to go and you want to look at your stocks. Okay, let me answer some questions. Anybody has any questions, please ask. I hope I gave you a clear path to maybe learn how to catch the knives. This 5 minute chart looks pretty sexy. I mean, look at here. You got 3 white soldiers right here. So maybe some of you rookies might want to go to your patterns are going to be different. You still have an inverse head and shoulders. I mean, I don't know if you would have took this trade right here. I would have took it down here. Maybe at the tweezer bottom I would have took it. But you don't know because it didn't break out of that channel yet, or it might have started to break out and you realize, hey, I think I got a good trade here. But you would have definitely took it off this head and shoulders and run it up to the 200. But you got 3 white soldiers right here. Would be a good exit idea to get out of the 200. You got 3 black crows right here. You got that spinning top right there, so maybe that would have been, might be working with the room a little bit more on the 5. I've been using the 5 minute more since Hey Sue come to the room. So look for the flags, look for the patterns. Good morning, James. I imported the TTM fib chart. How you determine to short or go for a long? Let's put this on the daily time frame. This is called the wave, the TTM squeeze wave. When you get to the top and your blues start to change, like a different color, and you're looking at the volume, and you see a little bit of divergence, maybe you had a big volume spike right here. This kind of tells me that we're going to have a little pullback and a little bit higher bounce. That's a huge volume candle. You don't see anything like that through the whole chart. You see another one right here, big volume candle. but the reversal definitely started getting a little negative right in here. And you'd have probably got out of that trade right at that volume spike, because it started changing colors, that trend. And then you had this knife right into earnings, and the TTM squeeze down here started to turn yellow. Then the next day you had that big volume spike, and she bounced on up, so she opened up high, pulled back, and then once it busted above the equilibrium, she started to move up. So anything above this is positive, and when it starts to show a blue line, that's when you want to get out of the trade and short it, or maybe wait for the pullback and look for a moving average or something that, like a 1, 2, 3 right here, chart pattern. Right then, she started to squeeze to the upside on your third drop right there. Higher lows, which is telling you that it's a little bullish. Well, it's about equilibrium. One, two, three. And when she busted above that TTM squeeze and started moving to the upside, take your profit at resistance. Then she started tanking on down. So that's how I use that. Also, you have indicators. If you go in here to studies, edit studies, type in TTM, scalper alert, import it. I think I put it in there. Let me double check. No. Why ain't it coming in? There we go. Finally. This will give you also indicators. Now this is called the TTM, what I say it was? Scalper alert. So it tells you to get into the trade on the dip, and it tells you to exit. So you go into that scalper alert, hit the thingamajigger, go into pivot high and pivot low, and change this color to red. That'll bring, or let's change that to green. Let's change this to red. This will also give you an indicator to get into the trade. And it'll also tell you when to short it. But I don't use that. I use trend lines and chart patterns and things like that. Look it up on the day. Probably better to use it on the day, daily time frame. I would say it's a lot better to use it on the day. It tells you exactly when to get out of that trade. Green, each one of these, 1, 2, 3, boom. Green to get in the trade, red to get out. Green to get in, red to get out. Double top. Green to get in, red to get out. Green to get in, red to get out. So that would be a good helper to use. You can add that to your chart. Good morning, Coach. Anybody else have a question? Is there a script? Not that I know of. Maybe if you use TrendSpider and typed in 3 black crows, or yeah, I mean you've got reversal patterns if you wanted to go with TrendSpider. Chart patterns, and you had a certain kind of pattern you wanted to trade. Then they have scans. Let's say inverse head and shoulder. You got exit and force. Then you get scans. Let's find out what time frame that works best in. So that's it. Anybody else have any questions? I didn't even look in the room, see who's in the room. Let's go over my 2024 watch list. Here's a TTM squeeze scan that I got, that I set up. See, like this one here is pulling back to the 50 SMA, IONO. We got path on here, pulled back to the 21. Draft King. We call this ascending triangle on Draft King. It's a little wedge. So everybody get a better idea on how to catch knives. I'm going to go ahead and boogie on out of here. I appreciate everybody. Subscribe and hit that like button if you haven't already. And we'll catch you later. Sneaky Snake Trading Strategy, where we talk about chart patterns, moving averages, and being in the now. Watch tech next year. Healthcare, energy, AI. Oh, some pictures.